Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, June 25th. A lot of red on the screen here this morning, pretty much making new lows nearly across the board, down 5 to 6 in the corn, down 5 to 10 in the soybeans. Wheat's a little more mixed, down 3 to 4 in Chicago and in Kansas City, up a touch in Minneapolis. Both products are lower as well in the soy complex. A lot of data out after yesterday's close. We'll start off with the Commitment of Traders report, which was pushed back from Friday. Money managers were net sellers across the board in the ag space for the third consecutive week. However, that pace of selling has slowed a touch. And again, this is data now looking back almost a full week as of the close of business last Tuesday, the 18th. There were net sellers across all classes in the wheat, pushing that short position back out to its largest level in 7 weeks. They did let up on the corn a little bit for the second straight week, having bought 21,000 contracts. They still are holding a rather sizable short position, however, at 191,000. Activity in the bean complex was mixed. There were net sellers in the beans and in the bean oil, while being light buyers in the meal. The money manager short position in the oil has now swelled to about 85,000 contracts. That's the largest short position since September of 2018. Index funds were also net sellers in the ag space. That's now for the 5th consecutive week. Most of yesterday's crop progress and condition report was in line with expectations. We did see a 3% drop in good to excellent ratings in both corn and soybeans. However, that said, they're both the highest rated crops in 4 years. As expected, the largest decline in ratings came in the Eastern Corn Belt, notably in the states of Indiana and Ohio, where hot, dry conditions gripped much of the region here last week. 8% of the country's beans are blooming, while 4% of the country's corn crop is silking, and both of those are in line or slightly above their historical averages. I think the biggest surprises in yesterday's crop progress reports again come in the wheat. Winter wheat conditions did improve another 3% to 52% good to excellent versus expectations of steady. Seems like this late season recovery in the ratings is trying to catch up with some of the better than expected yield reports we're seeing from the southern plains. Harvest advanced to 40% in line with expectations, however, well above 21% a year ago and the 5-year average of 25%. Right now, I think ratings would imply an average yield of about 52.5 bushels an acre, or just slightly above the USDA forecast in June at 51.4. Spring wheat ratings, however, did fall 5% to 71% good to excellent, much bigger drop than expected, and likely the reason for the higher trade in Minneapolis overnight. Big USDA reports on Friday. Historical tendency is for lower trade in the feed grains, a little bit better in the beans. We'll go over this in greater detail in my comments this week and also in Thursday's video. The average trade guess right now is looking for a little bit of a bump up in both U.S. corn and soybean acres. We're in line with the corn. However, in beans, we do look for about a 300,000 to 400,000 acre drop due to some anticipation of some of these acres being gone unplanted. Although we've seen conditions drop here a little bit, weather forecasts do suggest much better prospects for rain across the central and eastern corn belt over the next 5 to 7 days, while the heat for now appears to have moderated. And until that changes, I think rallies are going to be hard to come by, or even rebounds difficult to sustain, particularly in corn. Beans are holding in there a little bit better. Crush margins continue to inch up a little bit. Best levels in about 6 months. We'll also have a monthly update on Friday and the biofuel capacity and production, along with feedstock usage. Thank you for listening, everyone. I hope you have a wonderful day.